Today, we are going to deep dive into the world of algo trading. Get ready for an epic journey as we build a complete trading system from scratch. And yes, we will even test it on real time market conditions. In this session, we are not just throwing some indicators on a chart and hoping for the best. We are going to take a structured, step by step approach to design the trading system based on the powerful Elliott wave oscillator. First, we will lay the groundwork. Then, we will define our trading goals, risk tolerance, and ideal style for our system. Then, we will explore the fascinating world of Elliott wave theory, the foundation of our strategy. Once we will understand the theory, we will code our Elliott wave oscillator and build our trading rules. But that's not all. We will backtest our strategy on 5 years of historical data across multiple time frames to see if it really holds up. And finally, the moment you have been all waiting for, a live dry run. We will put our system to the test in real-time market conditions to see how it performs. This is going to be a comprehensive guide packed with valuable insights, whether you are a beginner or an experienced trader. So grab your notebook, get ready to code, and let's build the trading system together. Okay, so now let's make a plan that how we are going to tackle this situation. So what we'll do, first we will understand the trading system, right? So in this, first we will tackle that we will define our goals and style, right? So I'll just write the goals, right? Then we will understand the market analysis, right? Then we will move to the third part, which is entry and exit rules. The fourth part will be risk management. It is one of the most important aspects to be taken care of, because if you are able to take care of this part, then you are sorted. Only this part, can save you from any situation. So you have to take this very seriously, risk management. Then we will understand about the backtesting and optimization, right? So I will just write backtesting. The fifth part will be your tech, or you can say the infrastructure, right? I think I have made a mistake. I need to go back to the primary and learn the basic counting, right? So these are 4. This will be 5th, 6th, and 7th, right? So we'll learn these 7. If we are able to understand these 7 aspects of trading system completely, then it will be very helpful in the upcoming sessions, right? Okay, so now let's quickly get started with the first part, which is define goals and style, right? So in this, if you can see, I have this flow chart, and the mermaid code for this flow chart I'll attach in the link, so you can take and use that if you want. So before diving into the market analysis and technical details, it's crucial to establish a solid foundation by defining your goals and preferred trading style, right? So this will involve the objectives, right? What you are aiming to achieve, right? The first part, what you are aiming to achieve. So for example, if you are going to make this trading system, let's say for a consistent income, right? If you are an independent trader, or it may be a reason, let's say you want a long-term growth. Let's say you are investing for retirement in 20 years, then you can tolerate higher risk for potentially high returns, right? So it can be any reason, right? It can be any objective. So the next important part is risk tolerance, right? So how much risk are you comfortable taking? So for example, let's say if you are a low risk person, so you can't afford to lose more than 5% of your trading capital, right? This might lead to using tight stop loss orders and conservative position sizing. So you have to be very mindful of that fact. And then second is higher risk. So if you are comfortable with larger fluctuations in your portfolio, even it can means occasional drawdowns of more than 20%. Right. So this will allow for more aggressive strategies, right? Like trend following or investing in volatile assets like crypto, right? So you have to take care of this also, risk tolerance. The next we have is time commitment, right? How much time you can dedicate to trading. So let's say if you have a limited time, you have a full-time job, then you can only dedicate an hour or maybe a couple of hours each evening to trading. So in this, like, you can point towards swing trading or a longer term strategies, right? And if you have it, like, it's for the first is for limited time, right? Limited time. If you are, let's say, full-time trader, right, then you can monitor the markets right throughout the day. So this opens up possibilities of day trading, scalping, or actively managing a portfolio, right? So yeah. And then next you have trading style, right? So generally in trading style we have, the first is discretionary. So in this you have to analyze the charts and news events to identify promising trades based on your own experience, right? So this relies heavily on your intuition and market knowledge, right? So this is discretionary. Then it can be a rule based. So in this, let's say you buy a stock with its RSI crosses below 30 and sell it when it crosses above 70. So this removes emotion and ensures consistency, right, in rule based. And the last is we have quant trading, or you can say algo trading, which we are going to mainly focus on, right? So in this, your algorithm will automatically execute trades based on real-time market data and predefined signals. So this is like very common in HFTs and all those different kinds of trading. So we'll discuss that later on. And now we have to also think about the asset class, right? In this, like which market you really want to focus. So it can be a specialized market, like you can focus on trading major currency pairs in the Forex market, or you can go for, Bitcoin, Ethereum, the crypto market, or you can even go for the traditional stock market. It can be a US equity market or any Indian or any other country market, right? So, and also you can diversify the markets, right? You can have multiple strategies on multiple markets. You can even trade simultaneously on all the markets, like Forex, crypto, or the traditional stock market. So you have to decide that which market you are going to focus. So hopefully this is clear to you, right? So before, like, you have to understand all these concepts, right, very clearly. Or even if you are building for some other person or some other company the trading systems, so you have to clearly understand the goals and the style, right? So it will be really helpful for you to then work further, right? So now we have the second aspect, which is market analysis. So in the market analysis, we have to identify opportunities, right? So we have to research the historical data to identify patterns and potential trading edges. So for example, you have noticed technology stocks tends to outperform the market after positive earning announcements. So you have to detect all those patterns. So you have to identify the opportunities. It can be based on your client's information, or if you are an independent algo trader, then you can research on that basis. Then you have to formulate a hypothesis, right? You have to develop a testable assumptions about market behavior. For example, if a tech company beats earning expectations by more than 5%, then its stock price will likely rise by at least 3 to 4% in the following week. So it's not sure, but you have to you have to formulate a hypothesis for that. For that also you have to make some R&D, or if you are a company, then you have to involve some quant researchers or quant analysts for that purpose. Then the next is choose indicators. So in this, you have to select technical indicators that align with your hypothesis and the trading style. So for example, if you want to use the MACD indicator to identify momentum shifts in the stock price, and you can also use let's say 200 moving average as a long-term trend filter, and there are multiple indicators. So it's completely up to you. It's completely based on your research and development, that which indicator you are going to use. And then very, very important thing, which is data sources. So in this, you have to ensure that you have access to reliable and timely data, right? So it is very important the data is reliable and it is on time, right? The second is on time. Okay, so we are done with the second aspect, which is market analysis. If you have any doubts, please let me know in the comments. We can discuss that further, right? Next, we have entry and exit rules. So actually it was a big flow chart. I took the screenshot of that and I just divided the big flow chart into the 7 parts. So I'll paste the code for the mermaid flow chart in the descriptions, so you can use that the completely together, right? Okay, so in entry exit rules, these will define the core logic of your trading system, right? So when we talk about the entry triggers, in this you have to define as specific conditions for entering a trade. So for example, you want to enter a long position when the price breaks above the 20-day moving average with increasing volume, right? So you can use the moving average or the volume here. So it's completely up to you, the triggers. It was just an example. The next is exit trigger. So you have to set clear rules for exiting a trade, both for making profits and cutting losses, right? So making profits and cutting losses, it's very important, right? So let's say you want to place a stop loss order 5% below your entry price and a profit target at the previous swing high. So it can be based on your R&D. And last we have is trade management. So you have to determine how you will manage your open positions, right? So if you remember, then we have discussed about config file in the Forex trade, where we can define the open trades, how many trades can be opened at a time. So we can set it, let's say 3, 4, 5. So it will really help us in our trade management. It was for the entry and exit rules. And then next we have is risk management. One of the most important thing in the trading. If you are able to manage your risks, then you are completely sorted. So I would say this will be the most important part. The thing is, protecting your capital is paramount. You have to implement robust risk management rules, right? In this, the first aspect is position sizing, right? You have to determine the appropriate trade size based on your risk tolerance. So let's say you don't want to take risk more than 2% of your account balance on any single trade. So in that way, you can set this. Then next you have is stop loss orders, right? So you always have to use stop loss orders to limit potential losses, right? For example, I always use stop loss orders to automatically exit a trade if it moves against me. So it's very important using a stop loss. So what you can do before implementing it live, you can make a checklist. You can test each functionality of your system before the deployment, right? Now we have risk reward ratio. In this, you have to aim for a trade with a favorable risk reward ratio always. So let's say you want to aim for the trades with the potential reward for at least twice the risk, right? So it means, let's say you have a portfolio of 100 USD, for example, and you are just risking your $2 per trade, right? Means if you are risking $2, so at least you want to make $4 of any single trade, right? So it will become a 1:2 risk reward ratio. Then next we have is diversification. So in this, you have to spread your risk across different assets or markets. For example, you can divide your assets into multiple markets, let's say in Forex, crypto, or the traditional stock market, right? So you don't want to invest more than 10 or 20% of your portfolio in any single stock, right? So that's, you can decide, and you have to make a set rules for everything and then distribute your portfolio in that way. So it will be very, very helpful. Okay, next we have is backtesting and optimization. So definitely we know that before deploying our system, we have to rigorously test and refine it, right? So in this, the first we have is backtesting. So you have to test your trading system on historical data. For example, if you can test your strategies on multiple assets or multiple time frames on, let's say 5 years of previous data. So actually in this example, we will be using historical data of 5 years. Just wait for a few minutes and we will live test on the historical data later. And then next is performance metrics. So in this, you have to analyze the key metrics like the winning percentage, the average win-loss ratio, and the Sharpe ratio. So I'm sure that you must have heard about the Sharpe ratio, right? It is the expected return of the portfolio investment. So RP minus RF. RF is the risk-free rate of return, and then divided by the standard deviation, right? Yeah, this is how you can calculate the Sharpe ratio. So a higher Sharpe ratio indicates that the investment has a better risk-adjusted return, right? A higher value suggests that the investor is receiving more returns per unit of risk taken. Next is optimization. So in this, you have to fine-tune your system's parameters based on backtesting results, right? So let's say you want to adjust the parameters of the moving average crossover strategy to find the combination that yields the best results. So it can be anything, but you have to optimize. Or when we talk about the frag trade, in that we have a system that is hyper optimization. So I'll show you in the upcoming sessions. And then we have walk forward analysis. So in this, you have to test your optimized system on a new set of historical data to ensure it's not overfit. And now let's discuss about the technology and infrastructure. So in this, the first is trading platform. So it can be a custom built trading platform if you are a big organization. So all those big firms have their own trading platform, very optimized and very like fine tuned to the best of their performance. Or if you are an independent trader, then let's say you might use the MetaTrader for the Forex, or maybe the frag trade and the Hummingbot. There are multiple platforms, right? So, but these platforms should have at least the basic charting tools, indicators, or the order executing capabilities. For sure, it should be having, right? Next we have is programming language. So it depends completely on your requirement. If you are looking for a very fast trading system, then you should be going with C++. And if you are okay with the speed, then you can build your systems in Python, because it provides more data, more bigger communities. But it's completely up to you. Next we have is data handling. You have to implement efficient data storage and retrieval mechanism, because it is really crucial. So maybe you are going to store your historical data in a database and use APIs to access real-time data from any data provider. Next you have is execution. So you have to ensure that it is reliable order execution with your broker. So let's say you have a brokerage account with a reliable broker that offers low latency order execution. So it's completely up to you whether you are you are fine with the latency, or if not, then you have to ensure that thing also. Next we have is monitoring and alerting system. So it's completely subjective, but you have to have a very robust monitoring system for the trading, right? So you have to set up the real-time monitoring and alerts. So it can be the email alerts or your phone alerts. It can be anything. So let's say you will get a SMS when your system generates a new signal, or you will get a telegram message. So in FragTrade we have set up I have shown you like multiple times that we can set up a telegram. So it will send you message or notifications when you will there will any exit or entry or any stop loss hit. So it will show you all those things. You can set up that in any trading system, and that is crucial, right? Okay, now the last but not the least we have is paper trading, or live trading, or you can say dry run. So before deploying your system into the production, you have to do a thorough dry run test. So the first is paper trading. So in this you have to simulate your trading with the real-time data, but without real money, right? So before risking real money, you have to practice trading with the system using a simulator. Then we have is live testing. So before reaching this point, make sure you have done all the checks very thoroughly. You have tested everything, every in and outs of your strategy, everything, be it your system, be it your brokerage system. You have to thoroughly check it before deploying in production mode. So you can start with a small amount, and you can test in the live market conditions, and then you can gradually, if you are confident, then you can increase your capital as per your requirement. And then this is like a continuous process. So you have to test, and like you find any issues, bugs, then you have to refine your system, redeploy, redeploy, and for that you can have a CI/CD system. So in this is continuous integration, continuous development. So right, it will be happening like continuously. So you can use the DevOps for that. So yeah, we'll discuss these all things in upcoming videos. But for now, this was the basic, very basic informative video. So we can add, we can optimize, we can add, we can customize this in various forms, but this was a basic system we should be looking for. So in the last, I would like to again note some important considerations. So what are those? The first is, no trading system is perfect, right? No trading system is perfect. So be prepared for the losses and drawdowns always. Now you have to always anticipate that. Then second is discipline is the key. Discipline is key. So stick to your rules and avoid emotional decision making. And then last but not the least is stay informed about market dynamics and new trading techniques. So you have to put in your budget into the research and development. That's why these bigger firms like HFTs and all the hedge funds invest heavily on their R&D department. So this was the first part, and in the second part we will discuss the our trading strategy, the rules, in which we will learn about the Elliott wave theory, then the Elliott wave oscillator, and then we will code the strategy complete system, right? And then we will deploy it on the real market condition. So this was it for this video. If you have any suggestions, any any recommendations, any improvements, please let me know in the comments. And so for this video, this was it. I'll see you in the next video. Until then, bye bye, take care, have an awesome day.